The annual rates of both headline and core inflation rose in March 2013. Annual headline inflation rose to 4% from 3.5% in February 2013, mainly because of a rebound in monthly food crop prices. Food crop prices rose in March 2013 for the first time since November 2012. That most of the increase in annual core inflation from 5.6% in February to 6.8% in March 2013 is explained by the base effects arising from the fall in core prices in March 2012, the month from which the annual inflation rate is measured. Monthly core inflation fell in March 2013 to 0.4% from 0.9% in February 2013. There are clear signs of increased buoyancy in the economy, I am glad to say. Preliminary quarterly GDP data from the Uganda Bureau of Statistics for the first half of 2012-2013 indicate that real growth has accelerated in this period, driven by strong growth in services, construction, and manufacturing sectors. The recent trends in the index measuring economic activity also indicate that the recovery continued in the third quarter of 2012-2013. As such, it is possible that the negative output gap that characterized the economy in 2011-2012 has narrowed significantly. Total private sector credit grew in line with a pickup in GDP, although shilling-denominated loans have remained subdued. Compared to the macroeconomic outlook in recent months, we believe that the short-term prospects for economic growth have now improved, and that the constraints to economic growth from deficient aggregate demand are now clearly receding. Although inflationary pressures are relatively subdued for the most part, we expect that the annual core inflation is likely to remain at about 1 percentage point or 2 percentage points above the Bank of Uganda target of 5% for the next few months, given the base effects mentioned earlier and the short-term macroeconomic forecasts. Nevertheless, we fully expect core inflation to fall back towards 5% later in 2013. Given that the medium-term forecast for inflation is still in line with Bank of Uganda target of 5%, and that a recovery of real output is gaining momentum, the Bank of Uganda will maintain a neutral monetary policy stance and therefore hold the central bank rate constant at 12% in April 2013. The band on the CBR will be maintained at plus or minus 2 percentage points, and the margin on the rediscount rate will be maintained at 3 percentage points on the CBR. Consequently, the rediscount rate and the bank rate will be maintained at 15% and 16% respectively.